All right, good afternoon, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Tuesday, April 8th, 2014. All right, the Dow Industrials were up 10 points today. So we got a little bit of a pause. We've got a doji going on. Trend line was broken yesterday. This little trend line for the last 4 weeks or so has been broken. We had a pretty solid down move. I read somewhere online that they said it was the biggest percentage since 2011. I mean, these, they just punch in the numbers and they crunch out the computer data, and that's great. But, it's like it doesn't help me necessarily make any money on trading. So anyway, we could see visually that it was a pretty good draft to the downside. And this was a reversal day. Everybody talked about that. We've had, reversal days are fairly common. I mean, we had or literally, if you're talking about an outside day, this was a reversal day and it closed down below. And then there was another one back in November somewhere. I can't remember where, but I mean, we've had a couple of them. This was a reversal day. Higher high, low, closed below low, but didn't get anything. And so, this was pretty substantial because it was closed below several days trading. And then we got follow through yesterday. So that was key, that we got follow through, then it broke this trend line. So we're going to have to watch this and pay attention. The S&P 500 doesn't look quite as negative. It's kind of still holding in here. It's potentially getting support at this trend line. Intraday today it broke it, but it hasn't done that on a close. The Nasdaq, of course, is the weaker one. We've been talking about this for weeks. The numbers I've got in here, potentially is a 1, 2, and this is a sideways correction. We call it kind of a flat, an ABC flat versus a straight zigzag kind of thing. And so potentially we could get 5 legs down or 5 waves down. Don't know that yet, but that's why I just started the count. So the big thing here on the Nasdaq is that this trend line, or this trend channel, it's right at the trend channel yesterday. Okay, so these lines I've had drawn in here for months, and it's interesting that they're holding, at least right now. It'd be interesting, if it breaks it, it's probably going to come right down here to 38.50 would be my guess. Russell 2000, same thing. Russell's very much mirroring the Nasdaq. Kind of got this negative formation going on, which we don't see, which is kind of interesting. We don't really see that in the Nasdaq. It's a little more compressed. I don't like it that much. But then when you go to the New York Composite, you see it much clearer, more like the Russell 2000. So that's a little confusing. The way these broadening tops complete themselves is that they come down and break this lower trend line and break on down out of it. Okay, and so that's if this is truly bearish, it's got a long way to go to fulfill that. So we'll have to wait and see. Short-term trading index is basically in the neutral zone. It's not really showing us anything. The VIX bounced up today, intraday, got to this trend line, reversed. Okay, we break this trend line, we're going to get a spike, like a back up in here. So I say, you need to watch if the VIX breaks up into like 16.5, then there's a real good chance that this thing is going to spike and some heavy duty selling is going to come in. High-low index, I've got that over here. It's really still confirming it's going sideways. Still have 20 more new highs than new lows as a net. We haven't gone negative on that indicator yet. Last time we were negative is that whole sell-off scenario at the end of January into the early February. So that's it on those indicators. All right, tonight we're going to look at the 4 bank stocks because we'd looked at the XLF on the weekend, and it was breaking down. Looked like it was going to roll over. Looked like it had a little small top it was putting in. And we had been watching, of course, Goldman Sachs. Let's take a look at that because we've been in Goldman Sachs. I got in the puts over here on the 24th, held through this, and got out today, this morning at 157, which was my initial target. And since I'd been in them so long, I said, okay, I'm going to exit the entire position. Even though I think this formation, and by the way, it was a very nice trade. I think we made almost double the money on it. And so the details in that are on the trade page, and I'll be moving. That's the last March trade that I have. I call it a March trade because it started in the month of March. And so I will be archiving those over into the past trade ideas page. And I've got links to pages out on Google Drive that have the summaries for the month out there. So that's how I'm doing that with the past trade ideas. And March turned out pretty good for us. Option trade ideas, we had 8 out of 11 were profitable, so it was very good. And you guys can take a look at that. All right, so this on Goldman Sachs, this looks like a little head and shoulder consolidation. I call it consolidation because it's going sideways in here. It's not up here at the top. It's come down some already, then it's moved sideways. Now it's breaking down at this very strong horizontal neckline. It could pull back to the neckline and then sell off again. If you look at the measuring move, this would measure down to around 147 or so. So we'll just have to see how that plays out and if we have another chance to get back in it or whether it's just going to go right in the tank, continue selling off. Citigroup. This one is breaking down. It's below the 233-day. I don't see any specific setup other than the fact that it's, looks like it's selling off and going lower in here. It looks like it's getting support right around 46. I mean, if you look at where because we had a previous low right in here, 46.19, and today's low, 46.12. Okay, so it's got support that's possibly coming in around here at 46. So we'll have to watch that and see. Now this trend line here is a trend line all the way from the low of 2009. Okay, and so that's, you can see the heck of the sell-off that occurred in the 2008 crash. You can't call it anything else but a crash for Citigroup. And so now, if it were to break that trend line, that would be extremely negative for this stock. So we're just going to have to watch to see what it does. The next one is Bank of America. This has broken this trend line for November, and the next support down, I mean, it could get support in here around 16. But there's negative divergence up in here that was preceding this. Okay, on all the indicators, it was getting a negative divergence off of this point, which kind of preceded this sell-off. So there's a good possibility it'll come all the way down here to this area, and this is the 233-day SMA, and there's support from the previous high, which then became support below here. So this resistance became a floor, and it could potentially become a floor again, right where it ties in with the 233-day. And then the last one we want to talk about is JP Morgan. And JP Morgan is above the 233-day. It's trending up here. It's not showing any negative divergence on the indicators, and it's got this little trend line that it seems to be bouncing off of since the 1st of February. Notice how today it came right down to it and bounced up. Now, if it breaks this, it's probably going to come right on down here, at least down here into 55 to 54.5 kind of thing. So we'll just have to watch to see how JP Morgan trades on that. All right, so those are 4 of the main banking stocks that we've got, and those are the ones I wanted to talk about today. So that's it for tonight. Thanks for stopping by. Tweet this, share it, and don't forget to sign up so you can get updates and access to the Trade Ideas web pages. And we'll be back tomorrow. Everyone have a great Wednesday. This has been Joe for Beyond the Chart.